Big changes coming for the markets. Today, we're going to talk about why smart money is selling the US markets and buying the European markets. Then we'll look at the 7 best European markets that are available to trade publicly as ETFs and the ones that I think technically look the best for our consideration as investors. Let's get started. Well, I want to start this video off by talking about why the European markets are attractive from a fundamental point of view. So let's just take a look at PE ratios. Now, you guys have heard me talk a little bit about PE ratios in the past, and I have noted many times over the past few months that European markets are relatively cheap and US markets are very expensive. But let's take one last look just for those viewers who haven't watched some of my older videos. So this is a chart put out by Micro-Me Economics, and they're showing trailing PE up until the end of February of 2025. That's the blue lines here. And you can see, if we zoom in a bit, that the S&P 500 is trading still well over 25. And if we compare that to some of the other markets out there, such as Germany and the UK, as well as China and some of the Asian markets that I talked about in my last video, link below, then you can see that the US is most certainly not a bargain when compared to most other markets that we can trade in the world. Now I want to show you evidence that suggests that smart money is leaving the US market and buying other markets, including and maybe even particularly the European Union economies. Let's take a look. So this is the biggest investors, FMS investor positioning, which is the Global Fund Manager survey by Bank of America. So these are the institutional investors, and what are they doing? Well, here's the Eurozone and here's the UK. And you can see that's where the money's been going. Massive flow into those markets. Take a look at the US market at the bottom here. Massive outflow out of US. So there's a saying on Wall Street, follow the smart money. And you can see smart money is buying Europe and selling the US. That should be a clue as to why we should be looking at Europe right now. Now I want to take a look at the broad-based IEV, iShares ETF that represents the larger European markets in general. Now, Europe is like saying, candy. There are many, many types of candy, and there are many, many countries that make up Europe, and they all have their own stock charts. But this is a broad look at the European markets through this ETF. And we're going to look at a couple things. We're going to first notice that there has been a breakout. And whenever you have a new breakout to a new high, that's a positive thing. Note that the S&P 500, which is the largely followed US index, hit around 6,100 not too long ago and has had absolutely no luck in breaking that level, let alone even approaching it lately. So definitely you can see that price momentum is with Europe and against the US markets right now. Now, if we take a look at the specific indicators that I looking at, you can see money flow momentum has been very strong in Europe. In fact, it's a little overbought. And at the bottom here, you'll see this is, we'll zoom in a little bit more. You can see this is RSI. Also, price momentum on the ETF itself has been very strong, and it is as well a little overbought. So just keep that in mind. It's likely we're going to get some sort of a pullback, and we'll talk about that in a minute. But in the meantime, the bigger indicator, which is MACD, is strong and not yet super overbought. You can see what happens with MACD. At times it can go way up, and you'll see the histogram, kind of get up in the stratosphere. It's not quite there. And in fact, if we go back through history, when the MACD is moving strongly, that can, reflect a very strong market, as was the case in 2020, 21 on the European markets. So what I'm suggesting right now is that the European markets are a little overbought, as indicated by these 3 indicators, and this breakout might result in a very small pullback back to that neckline. In my opinion, if that neckline can hold, it could be a very, very bullish sign for new investors. All right, just quickly, there are about 16 publicly available European country ETFs. So we want to look at those that you can actually trade, and there are 16 of them listed here. We're going to look at 7 of them, and these are the 7 ETFs after I personally went through each one of these countries and their ETFs. I looked at what I felt were the 7 most encouraging looking charts to consider investing in. So let's get started on that. We'll start off, there's no particular order here, but we'll start off with Spain. And what I want you to notice is that yes, it broke to new highs. It's been a little bit parabolic, meaning that there's been a string of 2 months of basically nonstop upward action. That's because those institutions are buying into European countries, and Spain obviously being one of them. You'll probably get that pause that refreshes, as I like to say. The market will probably pull back to the neckline sooner or later, because you can tell just by looking at this, we're a little parabolic. If we go back to 22, same thing, you get a little pause. So probably some sort of pause coming in the next weeks, or who knows, but that will probably represent a very good opportunity on this index. Next market we're looking at is similar story. It's Austria, and huge breakout, big white candles on the chart, broke out from its old highs, likely a little overbought, likely to pull back, but I want you to keep it on your radar, because this is a positive thing when you see such a massive breakout. Yes, it could pull back. That will probably be a great opportunity. Now let's look at Sweden. So Sweden, unlike the last 2 indexes we just looked at, is just trying to break out its old 2021 highs as well as its 24 highs, and it's barely breaking out. So we want to make sure that that breakout is legit. We want to give it a bit of time, but the one thing going for this market is that it is not parabolically overbought like the last couple that we looked at. So probably keep this one in your radar screen, because if it continues to move up, it probably has some legs behind it before it gets overbought. Okay, next one. Very strong market. You guys are probably aware, lots of good news coming out of Germany, lots of parliamentary decisions that they've been making from their monetary and fiscal policies. And it just seems to be stimulating the markets in Germany. And you can see that, old highs going way back to 21 just busted. And that's a long base, and that's a big breakout. A little overbought probably based on the look of this chart. It's probably a little parabolic, may pull back somewhere near the neckline. That often happens. Any pullback on this index should be very, very interesting for us to consider as a buying point. Okay, Italy. Now, this is a very nice breakout. It consolidated through much of 24 and then did another nice breakout. Again, could be a little overbought, could pull back a bit, but great looking chart. I love Italy for many reasons. They really did bring in a much more fiscally conservative leader to the party a couple of years ago. She's a real powerhouse. They were very, very socialist through history, and they've made some big changes. And we're seeing, some of their top stocks, a favorite of mine, which is Ferrari. I'm being a car buff. That stock has been on fire. So again, great market to look at. Could be a little overbought, could pull back, but just a wonderful looking chart. Okay, Switzerland. Another one of these stocks that is just barely breaking out, as you can see. Definitely has had quite a run lately, and that breakout may be in danger. But so as a new investor, I would definitely give it some time before I bought this index, because this could fail right here. But if it does manage to move up a little higher, I would actually be encouraged enough to probably start legging into the position. We don't own it right now, but I do think it's an interesting looking market for new investors. All right, France, same idea that we saw on the last chart. It's just coming into a resistance point. It's trying to break out. Hasn't really done that yet. If it does, though, could be a very, very interesting play. Final chart, the UK. Good old England and Scotland. Well, we're seeing another nice breakout, and it's fairly early stage, but it's pretty definite. They are seeing a breakout. I do think with a little bit more time, if we do continue to see strength on this market, again, will be a very positive thing. Again, going back to those institutions, they're going to go where the most liquidity is, and the UK is definitely a high liquidity market. So I hope you got a lot out of this video. We're always looking for new ideas. I present new ideas on this video series every single week. So I do suggest you like and subscribe, because you want to have always fresh ideas coming at you as an investor to consider. You don't have to take my word for it. You have to do your own analysis, but you need a source of ideas, and my plan is to be part of your source of new ideas for investment. I hope this was enlightening, and we'll see you next week. Hey, thanks for watching. I hope you got value out of this episode. Please like and subscribe below. We're trying to grow the channel, and it would really be doing us a big favor. I'm presenting ideas every week on trades that we're actually looking at Value Trend. And by the way, I don't just talk the talk, I walk the walk. I have been a portfolio manager for 35 years. And in fact, I was one of the very early pioneers in technical analysis here in Canada. On my website, valuetrend.ca, you will see a link for our online trading course. And this course is a complete money management system. I do encourage you to take a good look at that and consider taking it. I priced it extremely low because I want retail investors, that's you, to take the course and get value out of it. It's literally my 30 plus years of experience put into one complete step-by-step course. And honestly, I wish that I had had something like this when I was an early investor. It really will stop you from making so many mistakes. I also suggest you subscribe to our Never Miss an Opportunity program, which is our blog and our newsletter. There, you're going to get ongoing ideas, tons of charts, lots of trading ideas. And by the way, we never, ever solicit. We don't send you junk spam and stuff like that to try to get your business. It's for information, because part of my passion is to teach retail investors how to invest properly. I've been doing this, as I said, for 35 years, and I hope that I'm able to pass on some of the things that I've learned through this career as both a pioneer in technical analysis in Canada and a long-time portfolio manager. Thanks for watching. Don't forget, push like, push subscribe. See you next time.